The Peter Schiff Show.
Today's podcast is sponsored by NetSuite, the easy-to-use cloud-based business management software for every aspect of your business. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold.
Good evening, everybody. I have had a long day today. This morning, we arrived back in port in Fort Lauderdale. I was with the real estate guys for the Summit at Sea. We were 8 days at sea, and that followed 2 days on land. So it was a 10-day event. Just got back. In fact, we flew back early this morning because we also had to drop our kids off at camp. My two youngest kids who were on the cruise with us, we had to take them to summer camp, and it began today. So after we arrived at the airport, we had to go back to the house, change their luggage, and then drive them further north to their camp and then come home. So it's been a long day, but I wanted to get a podcast in because I know I wasn't able to do them from aboard the ship. Didn't really trust the Wi-Fi there, so I saved the podcast for Sunday night. And one of the things that I actually learned on the Real Estate Guys cruise, it came up on a panel. I didn't even know that this had happened. And it's a significant news story, so I was surprised that I missed it. But what I learned was that the U.S. government had recently announced that it would be guaranteeing second mortgages. Now, this is going to be another huge problem. And it is also highly inflationary. At a time where the Federal Reserve is supposedly fighting inflation with a tighter monetary policy, to have the U.S. government enact an inflationary policy like this one, not only does it make no sense, but it should evoke loud criticism from the Federal Reserve. But of course, crickets from the Fed governors, because they're too much of a wimpy to criticize anything that happens in Congress. In fact, as I pointed out, they're now hiding behind the idea that the Fed is independent, from meaning it can't be critical. The purpose of an independent Fed is so it can criticize the government. See, if the Fed wasn't independent, they wouldn't criticize the government because, the government would be in charge and the government would prevent the Fed from being critical. But if you have an independent Fed, criticize Congress. I mean, what's the point of having an independent central bank if it's not going to criticize the government when it does something foolish, or in this case, foolish and inflationary at a time where the Fed is trying to fight inflation? I mean, that is its most important goal right now, is fighting inflation. And now you have the government doing something so counterproductive as guaranteeing second mortgages. But not only, does this fly in the face of what the Fed is trying to do. And so now you have, again, more examples of the government and the Fed working at cross purposes. But it also shows that the government never learns from its mistakes. And in fact, it never stops repeating its mistakes. And the reason that the government doesn't learn from its mistakes is because it still doesn't understand that it made the mistake. You would think that after the financial crisis of 2008, the government might have learned its lesson about the dangers of government guaranteed mortgages. But no, I mean, not only has the government not stopped guaranteeing mortgages, it guarantees more mortgages than ever before. In fact, following the 2008 financial crisis, I forget exactly when, I testified against this in Congress and it passed. But the government began guaranteeing multifamily mortgages. So if you buy a duplex or a fourplex, the government will guarantee that loan too. Now, remember, the whole purpose of the government guaranteed mortgage in the first place was, to help people qualify for a mortgage, right? The goal was to have more home ownership. And so the government promoted that goal by guaranteeing mortgages. Well, if that's the goal, and it's not even a goal that should be pursued, but if it is the goal, then why do you guarantee multifamily? Because these are investment properties. So if somebody's buying real estate as an investment, why should the government guarantee that loan? I mean, clearly it's not just trying to help somebody try to afford a house. You're helping somebody start a real estate business. That's not why the government initially got into the business of guaranteeing mortgages. So again, once the government gains some type of power, it constantly expands that power well beyond the original intent of why it got the power. And of course, part of that goal with guaranteeing mortgages was to help make home ownership more affordable. Because when the government guarantees the mortgage, the borrower can get a better rate than if the government doesn't guarantee the mortgage. And that was supposed to make it more affordable because the borrower could get a lower rate. Because when the government guarantees a mortgage, that mortgage effectively becomes a U.S. Treasury. Now, there was never an explicit guarantee on those mortgages. It's implicit. And so mortgages had a interest rate that was a bit higher than U.S. Treasuries for the same maturity, but not that much higher, and certainly significantly lower than if the borrower had to rely on his own creditworthiness to get a loan, because obviously he'd be a lot less creditworthy than the U.S. government, and so the banks would charge a commensurately higher rate. And so by getting this government guarantee, the borrower gets a lower mortgage, and therefore homes are more affordable. Except it backfired on the government, because once the government started guaranteeing mortgages, well, then it became easier for home buyers to take out bigger mortgages. In fact, the banks didn't give a damn. As long as the mortgage was guaranteed by the government, didn't matter how big it was. Now, the government had loan limits, so if the loan was too big, then the government wouldn't guarantee it, and then the banks wouldn't make the loan. But as long as you borrowed within the government limits, the government didn't give a damn. I mean, the lenders didn't care, right? Because it was government guaranteed. And so what happened was home buyers could borrow a lot more money since they were borrowing with the government co-signing the loan than they could without the government co-signing the loan. And so they were able to borrow more money to bid up home prices. And so as a result of government guaranteed mortgages, real estate prices rose much higher than they otherwise would have been absent those guarantees. So again, the government's plan achieved the opposite of the intention. Instead of making home ownership more affordable, the government guarantees made homes less affordable. It made homes more expensive. And now people had to borrow even more money to buy them. But they were able to do that because of the government guarantee. But they would have been better off borrowing without a government guarantee, paying a higher interest, but borrowing a lot less money. And so they would have got the home cheaper. And so they would have had more equity. Also, they didn't have to put the down payments. That was the other thing. It didn't matter if there wasn't a down payment. The government just guaranteed the loan anyway. So without the government guarantee, the lenders wanted a down payment. They wanted the borrower to have skin in the game. But once the government guarantees the mortgage, they don't give a damn whether the buyer has any skin in the game at all, because they can't lose. When the government guarantees the mortgage, the lender can't lose. So who cares? Who cares if this guy could actually afford this home and is ever going to pay back the mortgage? Because the government's going to pay it back. That's the moral hazard that the government created when they guaranteed mortgages in the first place. And of course, Fannie and Freddie, which were the agencies through which the government put through this guarantee, they all went bankrupt in 2008 because of the losses. And of course, the government, instead of allowing the holders of Fannie and Freddie insured mortgages to lose money, the government made that implicit guarantee explicit by basically bailing everybody out, except the stockholders of Fannie and Freddie. They got clobbered. Now, if you look at the stocks, they're coming back now, actually. There is a trade. There are people now betting that Donald Trump, if he wins, is going to resurrect these guys from the grave. I'm going to talk a little bit more about Trump later in the podcast. I happened to catch his interview on the All In podcast, and so I had some comments about that. But a free market guy, if Trump was a free market guy, the last thing he would do would be to resurrect Fannie and Freddie from the grave. In fact, we should kill them off completely. The government should get totally out of guaranteeing mortgages. But of course, they're not going to do that. In fact, they're doing something even worse. As I said at the top of the podcast, now they're not just going to guarantee the primary mortgage, they're going to guarantee the second mortgage. And just like the government now owns the mortgage market because of this guarantee. And again, the government should not be involved at all. If somebody wants to buy a house, they should have to do it based on their own credit worthiness if they're going to borrow money. The government shouldn't be guaranteeing anybody's mortgage. There's nothing in the Constitution that says the government can guarantee anybody's debt. It is completely unconstitutional for the government to do that. And why should the government guarantee somebody's debt, but not somebody else's debt? Why should one taxpayer be on the hook? If somebody wants to go out and borrow money to buy a house, let's say I don't buy a house, I'm a renter. Why should my taxes subsidize somebody else to go buy a house? Because after all, if the house goes up in value, I don't get any of that gain. But if it goes down and they default, well, I'm stuck with a loss? No. This is not something that the government is supposed to do. And if the government stayed out completely of the housing market, we had a free market, well, then it would be far more efficient. We wouldn't have all these problems in the real estate market. You want to buy a house? Fine, go buy one. Save up the down payment. Find a bank who's willing to loan you the money, because banks are willing to make loans. They just don't want to make bad loans. They want to make good loans. They want to make loans where they get paid back. And so they want to make sure that you can afford to repay, that you've got a decent down payment, that you've got a good job, that you've got income, that you can handle not only repaying the mortgage, but you can cover the cost of maintenance and property taxes. Home ownership is expensive, right? So the banks want to make sure that if they're loaning to somebody, they can afford it. That's all good stuff. And all that good stuff goes out the window when the government comes in with a guarantee. Because now the bank doesn't give a damn about anything. They know they can't lose, so they make the loan. And now the borrower is able to just recklessly, borrow money that he never should have been allowed to borrow because he can't possibly pay it back. And he's just gambling that real estate prices are going to appreciate. And that was really a big factor in the housing bubble that ultimately busted the 2008 financial crisis. But again, instead of learning from their mistakes, they doubled down by guaranteeing second mortgages. I'm going to get into that specifically on the other side of this break. So stick around. We'll be right back.
Here's some quick math. The less your business spends on operations, on multiple systems, on delivering your products or services, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one source of truth. With NetSuite, you'll reduce IT costs because NetSuite lives in the cloud with no hardware requirement, accessed from anywhere. You cut the cost of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies have already made the move. So do the math. See how you'll profit with NetSuite. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold.
All right. So I'm talking now about the government's recent decision to guarantee second mortgages. Now, I think one of the reasons that they're doing this is because Americans are broke and desperate for cash, and they can no longer tap into their home equity by making a refinance. Now, when somebody refinanced a mortgage, they went from one government guaranteed mortgage to another. Because if you had a first mortgage on your home and you refinanced it into another first mortgage, that new mortgage was also government guaranteed. So the banks were, handing them out like hotcakes. But those refis also, because real estate prices were rising and because they were refinancing into lower rates, what a lot of people were able to do was take cash out in the refi. Maybe they had a $300,000 mortgage going into the refi, and when they came out, they had a $330,000 mortgage, and they took $30,000, they put it in their pocket. But thanks to the lower interest rate, even though they were able to cash out the $30,000, their monthly payments still went down, even though they were financing a larger balance. Thanks to the lower rate, they ended up with an even lower monthly payment. So they got a twofer. They got cash and they reduced their nut. And a lot of times what they ended up doing with that cash, maybe they paid off some credit card debt, right? Or other higher rate loans that now they didn't have to deal with because they got an even lower rate on their mortgage. Well, now homeowners are in trouble because inflation has driven up their cost of living. Maybe they have a fixed rate mortgage, so that hasn't gone up, but everything else has, including everything associated with their home. Their property insurance is doubled. Their maintenance costs have gone way up. Their local taxes have gone up. Their utility bills have gone up. And so they need money, but they can't do a refi anymore because the rates are higher. Even if their property has gone up in value, which most properties have, right? So they've got more equity. They just can't tap into it with a refi because they can't give up the rate they have. And if they refinance out of a 3% mortgage, they're going to be at a 7% mortgage. I mean, what idiot's going to do that, especially since it'd be such a much higher payment? So that lifeline has been severed. So how are people going to tap into that home equity? Well, they could take out a second mortgage, right? Keep that first mortgage and keep that low rate, but go get a new second mortgage. Now that mortgage is going to be at a much higher rate because there's no government guarantee. At least there wasn't, right? So it's going to be much higher. Plus, the second mortgage, by definition, is a lot riskier than the first mortgage, even if there was no guarantee. Because if a homeowner defaults on a loan, the first mortgage gets paid first in full. And then, of course, the government gets any back property taxes. Only if there's money left over would the second mortgage get something. So you're in last place. Well, unless there's a third mortgage, and then that idiot's in last place. But most, it's hard to get more than a second. But I got a second mortgage. I got a lot more risk. And so I'm going to charge an even higher rate of interest, and I'm going to be a lot more, restrictive as to who I loan the money to, right? I'm going to look at how much equity cushion they have because I know real estate prices could drop. And if they do, I could be in a lot of trouble if the equity is gone that I'm counting on. I got to make sure this guy's got a good job, that he's not going to lose it, that he's had steady employment. I'm going to really do my homework because this is a free market in these second mortgages, right? It's not, the government's not tilting it, or at least they weren't. And in a free market, in basically a weak economy with an inflated real estate market, where banks are already in trouble, right? They're insolvent, as I mentioned, thanks to years of 0% interest rates. The banks are already loaded up on long-term mortgages and government debt. So a lot of banks probably don't have the capital to make the second mortgages. And so people are stuck. They've got all this untapped home equity, but they can't tap into it because they can't get a loan. They can't refinance their first mortgage, and no one will give them a second mortgage. Right? Now, in comes the government. We got a solution to this problem. Let's have the government guarantee the second mortgages. All right. Well, so now any idiot can get a second mortgage. I guess now the government's guaranteeing it. No one gives a damn. As long as you can check the boxes, you go into a bank and they're going to give you the money. And in fact, the interest rate on that second mortgage shouldn't be any higher than the first mortgage because it's guaranteed. You can't lose. So it doesn't matter if there's any equity left over after the first mortgage is paid off, because you're going to get paid off anyway if you got the second mortgage. So the whole concept of a second mortgage has been destroyed, right? It's not even junior to the first mortgage because both mortgages have government guarantees. So none of it matters, as far as the property is concerned. If the government's guaranteeing both mortgages, you're fine. In fact, now I suppose we can have a new market for the third mortgage, right? Now, I said they didn't really have those. Well, now the government's going to destroy the market for second mortgages, but now it's going to create a high-risk market for third mortgages, right? Which until the government gets around to guaranteeing those. But for now, they're just guaranteeing the second mortgage. And so now this is going to make it very easy for people who are struggling with high credit card debt, which we know people are because credit card debt is at an all-time record high and credit card interest rates are over 20% at an all-time record high. Now, a lot of people with all this credit card debt, if they happen to own a home, well, now they're in luck. They can take out a government guaranteed second at a low rate. They can pay off the credit card debt and then start charging all over again. If they don't have credit card debt, they could just go out and get a second mortgage, borrow a bunch of money, and start spending it, right? They need the extra money because everything they need costs extra money. So now they know where they can get it, right? By taking out a second. So you already can see where I'm going. This is highly inflationary. This is a massive expansion of credit. And remember, I've talked about that on the podcast. Inflation is not just an expansion of the supply of money, it's an expansion of supply credit. Because in the economy, credit is just like money. You can walk into a store with no money and walk out with shopping carts full of stuff. Why? Because you have credit. You can buy with credit as easy as you can buy with actual cash. So the credit in the economy, consumer credit, is part of the inflation. You expand credit, prices are going to go up. And what's going to happen when you expand all this mortgage credit? Prices are going to go up because homeowners are going to take the money that they can now borrow against their homes, which they couldn't borrow before because they weren't creditworthy enough, or they couldn't afford the high rate of interest they would have been charged. But they take out these loans and now they go out and buy stuff. They go to the market, buy food, and they go out and maybe buy a new car. They buy some appliances. Maybe they do some home remodeling, and so they got to buy up some materials, or they pay wages. All of this is going to push up prices. Right? It's all inflationary. Now, of course, it really sucks for the guy that doesn't own a house, who can't tap into this credit well, right? He's got to compete. I'm a renter. I want to buy stuff. I want to buy food. But the guys that are, moving down the aisle who own homes, they got a lot more money to buy food than I do because they got all this credit on their second mortgage, and they outbid me. Or I want to buy whatever. Anything I want to buy, I'm competing with homeowners who now have a second mortgage and more money to spend. Not only do they have their income, but they have, their home equity. I don't have any home equity. I'm still renting, right? But now the government is, of course, forcing me to subsidize this because if that guy doesn't pay his bills, in theory, my taxes go up. But what is going to happen when people default? No one's taxes are going to go up. It's just more inflation because then they're going to print more money there to bail out the lender so that the lender doesn't lose. And so it's inflationary as the credit is expanding and people spend it, and it's inflationary when the loans go into default and the government has to print more money to cover the losses on the loans. But there's another reason that this is inflationary. Let's assume that I'm a homeowner and I'm really in a lot of trouble. I got a lot of bills I can't pay. I need money, and I can't take out a second mortgage because I'm a risky borrower. Nobody wants to give me a second mortgage. What might I do under those circumstances? Well, sell my house, right? I own a house. I got all this equity there. I'm in a lot of financial trouble. I'm in over my head. I got too much other debt. All right, I got to sell my house and I'll rent. And that's how I'm going to repair my balance sheet, right? I'll take this asset. I'll pay off my liabilities. I'll have a little bit left over. And then, I'll try to save up some more money. Maybe I'll buy another house, in the future when, I'm in better financial shape. We need houses to come on the market, right? There's a shortage of homes. There's not enough houses on the market because so many people have 3% mortgages, 4% mortgages. They ain't selling. They're holding on to these. But if people get in financial circumstances where they can't really afford to stay in their home, then they're going to sell it. And so that home's going to be on the market. But now, thanks to this new government guarantee, where the government is guaranteeing the second mortgage, I don't have to sell my house. I can keep it, which I want to do anyway because I got that sweetheart deal on my first mortgage. And now I can get another great deal on the second mortgage, right? I can't get it for 3%, but I could probably get it now at 4.5 or 5 or something like that, which is actually lower. Now that the U.S. government is guaranteeing a second mortgage, the rate on the second mortgage is probably going to be lower than it was when the Fed had rates at 0, right? So even though the Fed has lowered rates, the government, through its guarantee, even though the Fed has hiked rates, the government is lowering rates by guaranteeing second mortgages. The U.S. government has effectively delivered a rate cut, right? So the Federal Reserve is hiking rates. Well, the U.S. government has already cut rates. So now you have a big drop in rates on second mortgages. The Fed should be hiking rates now in response, in retaliation, right? The Fed should be mad at the U.S. government for undermining what it's trying to do. The Fed wants higher rates, and the U.S. government just lowered rates on mortgages. In fact, second mortgages may be cheaper now than they've ever been because they've never had a U.S. government guarantee, right? So now we have these really low rates. So now we're going to have a boom as everybody and their brother takes out a second mortgage. In fact, I would recommend that pretty much everybody do that. If you have a house, right, why not? Because you're going to get a fixed rate that's going to be lower than the inflation rate. Government's guaranteeing it. You might as well take the money. I just wouldn't spend it. I would invest it, right? That's what I would do. I would borrow that money and make a quality investment where the income on the investment exceeded the interest on the government guaranteed second mortgage. But now I don't have to put my home on the market. And so the supply of homes doesn't go up. In fact, this guarantees that the supply of homes is going to go down because a lot of people who might otherwise have put their homes on the market are not going to do that now that they can take out a second mortgage at a super low rate. So they're going to do it. So what does that mean for home prices? That means higher home prices, which means even more second mortgages and even larger second mortgages. But also, it doesn't just mean higher home prices, it means higher rents. You see, because the government has taken this action, which is going to limit the number of homes for sale, that makes it harder for a renter to buy, especially a first-time home buyer. They're trapped as renters. And what does that mean? That means that it's easier for the landlord to raise their rent because they've got a captive audience, right? You can't say, screw you, I'm going to go buy something, you try to charge me that much rent. The landlord knows you can't buy anything because there's nothing to buy. And even if there was something to buy, you still can't afford it because the mortgage rates are too high. And so it means that rents are going to be rising even faster as a result of this. So rents, of course, are in inflation, not directly because they're not actually there. It's owner's equivalent rent. So it will show up there, but it will show up in the pocketbook of Americans who are renting. So this bill is the worst thing that could happen to the renter because he's got no access to that cheap credit. All he gets is the bill. And not only does he get the bill as being a guarantor through the government of those mortgages, but he gets the bill in terms of higher rent. His rent is also going to go up because he's being taxed to subsidize somebody's second mortgage. That means that his own rent is also going to be higher than it otherwise would have been, in addition to everything else that he buys, because everything else he buys is also being bought by homeowners who have taken on second mortgages and have used that money to bid up those prices. So this is massive inflation. Nobody's talking about it. Right? I mean, nobody was talking about it to the point I didn't even know about it. Right? It happened. I didn't even know about it until I found out about it on a panel on a real estate cruise. So obviously, it's going to come up when you're talking about real estate because it's very important to real estate investors about this. But very little discussion in the mainstream media at all. I've never heard any Fed governors asked about this. Of course, they wouldn't even want to opine on it because they don't want to touch it with a 10-foot pole because they realize how inflationary this policy is. I mean, even if the Fed was on the trajectory to get inflation down to 2%, there's no way they would succeed with this bill. It would take 2% off the table if it was ever on the table, which it was not. I've been saying that we're going much higher than 2%, and we are. But now this just means that we're going to get there even faster. And we're going to see, I think, some big implications of this by next year, right? It may not be as big a factor in the CPI in 2024, although it may impact some of the data later in the year, but it's going to be felt a lot more in 2025, regardless of who is elected president. Now, before I get to Trump, because I wanted to talk about a couple of things there, but there were also some economic data points that came out during the week that I wanted to mention. The housing starts and permit numbers took a real dump, right? And again, this is further restricting the supply of homes on the market, which is going to be restricted even more by the government guaranteed second mortgages. But of course, as inflation continues to put upward pressure on raw material prices and on interest rates, which it will, then the cost of construction is going to keep going up. And so it's going to be harder and harder to build new homes. And so those numbers are going to keep going down. But there's a couple of important numbers. The jobless claims was another bad week of jobless claims. But I'm looking through these statistics. The one I'm looking for, here's Philly Fed. That was kind of a non-event. The current account, that's what I was looking at. The current account deficit. Nobody talks about this. Nobody. And what's the current account? The current account is a combination of the trade deficit and then a deficit in net payments, interest payments. It's what we earn on our overseas investments versus what we pay to our overseas creditors. And there's a lot of upward pressure right now on the current account because interest rates are obviously a lot higher now on U.S. government bonds. So we're paying more interest abroad than we used to. Of course, interest rates are up across the board, but I think we have more debt, so it's having a negative impact. The current account deficit for the fourth quarter of last year was reported at 194.8 billion. And the consensus was for an increase to 205 billion. Well, what happened was they went back and they revised the fourth quarter of last year to a deficit of 221.8 billion. And Q1 of this year, the deficit came in at 237.6 billion. These are huge numbers. And at this pace, if we do this deficit 4 quarters in a row, it will be, or 2024 will be a new record for the biggest current account deficit in 1 year in U.S. history. The current record was set in 2022, right? After everybody got their stimulus money from COVID, we went on a buying binge and imports shot up. But what's really driving it now is the cost of servicing debts held by international creditors. Now, I looked at the Q1 deficit in 2022, and it was actually quite a bit larger than the Q1 deficit in 2024. So we'll see what happens for the rest of the year as to whether or not we can beat the record high. I think we can. I have a feeling that we're going to see these deficits rising throughout the year, and that ultimately 2024 is going to have a record high current account deficit, and then that record will probably be broken in 2025. And again, anyone who says we have a strong economy, look at the current account deficit. That's a report card on the economy. It is an F. It's an F minus. Right? So you can't claim to have a strong economy when you're bleeding red ink in your current account. Now, another very weak data point that came out during the week was retail sales. And everybody is looking at the consumer, and the May retail sales numbers were horrible. The expectation was for a 0.3% rise, and that was from a flat April. Well, April was revised to minus 0.2, and May was only an increase of 0.1, not 0.3, but it increased from minus 0.2, not 0. So it's a huge miss. And again, it's not adjusted for inflation. So retail sales actually fell if you adjust them for inflation. In fact, they fell without adjusting them for inflation in April by 0.2. What's going on? Americans are paying more to buy less. That's American life. And in fact, X vehicles, we were minus 0.1 in May. That was versus expectations of plus 0.3. And for the prior month, April, which was originally reported as plus 0.2, that came out as minus 0.1. So you have back-to-back falling retail sales X cars, not adjusted for inflation. If we did adjust them, it would be an even bigger drop. And the same thing with X vehicles and gas. The prior month is now minus 0.3 instead of minus 0.1. And May, which was supposed to come out at plus 0.3, came out at plus 0.1. But it came out at plus 0.1 from minus 0.3. So if we hadn't revised the prior month way down, then this month would have been down. So these are horrific numbers. If you're looking at retail sales as some kind of driver of the economy or barometer of the economy, this was a horrible number. I'm surprised, really, that we haven't seen more weakness in the dollar because we've seen strength, and we haven't seen any strength in gold. Gold's been flat. In fact, we had a lot of volatility on Thursday. We did get about a $30 rise in the price of gold. And then on Friday, we got almost a $40 drop in the price of gold. And the catalyst there was we got one data point, the PMI for June, that was stronger than expected. Instead of coming in at 54.5, it came in at 54.6. And the manufacturing index came in at 51.7 versus 51. And the services index, which was supposed to be 53.7, that one was a bigger beat at 55.1. We got that one number, and the dollar, jumped big. Gold got clobbered immediately because we got one, strong economic number. Well, I mean, it's lost in the sauce of weak economic numbers. I mean, talk about an exception to the rule. Most of the economic data we get is weak. Yet the market seizes on this one. In fact, we got the leading economic indicators that came out also on Friday that were much worse than expected. I mean, they've been down every month for, I forget how many. It's been so many. There's been 1 month that we had the data up. And it's been like 2 years or something like that, I forget, of negative LEI. In fact, we had broke the record set during the 2008 financial crisis, or during the Great Recession, rather, of negative leading economic indicators. And the numbers we got today, I'm looking for them. I got them somewhere on my computer. Oh, that's the Empire State Manufacturing. That was down. That was a weak number. Yeah, the LEI was down 0.5. It was supposed to be down 0.3 and down 0.5. And the prior month was down 0.6. I mean, 2 lousy months. These are forward-looking, leading indicators. Remember, now people think that they don't even matter, right? No, these indicators must not work because they've been, predicting recession for so long, and we haven't had a recession, so I guess they don't work. Well, maybe they do work. We do have a recession. It's just our other statistics are wrong, and they're not properly labeling the recession that the leading economic indicators have been forecasting for a long time. Anyway, I want to talk a little bit, though, about Trump. I was listening to his interview on this All In podcast. And again, I wish they'd had asked them some harder questions, instead of just giving them a bunch of softballs. But, even if Biden was there, I kept thinking, like, could Biden even manage to be on a podcast? I don't think he's ever done a podcast. I don't think he could sit through even the softballs he'd whiff, right? He wouldn't even be able to hit those. So, it's at least Donald Trump can be a guest on a podcast and answer questions, even if they are, easy questions. But, one of the things that Donald Trump said, and, he says things that are good sometimes, but he talked about how the government should get rid of the Department of Education, which, is something that Ronald Reagan actually campaigned on, getting rid of the Department of Education. Of course, it's still here. Ronald Reagan's long dead, but the Department of Education lives on. It was started by Jimmy Carter, so it's not like it was around, since the birth of the Republic. It was like a new thing, I think. And so, no, that was the Department of Energy that was started by Jimmy Carter, right? And he wanted to get rid of that. He wanted to get rid of both. So the Department of Education was around a little bit longer than the Department of Energy. But we should have gotten rid of both, but unfortunately, we didn't get rid of either. But now Donald Trump is saying, we should get rid of the Department of Energy. He says it's a state's issue. The federal government should be doing it, and it does a lousy job. And that's absolutely right. And that would be great if he left it there. But he follows up by saying we should get rid of the Department of Education and then send the money back to the states. What money? We don't have any money to send. We're borrowing the money to pay for the Department of Education. Are we going to send the bill to the states so that they can borrow the money? No, the idea is get rid of the Department of Education and apply the savings to reducing the debt. You don't want to send the money anywhere because there actually isn't any money to send. You just want to stop spending money that you don't have so you don't have to borrow as much money, right? So we don't want the states to just start spending a lot more money. We want the federal government not to spend any money. Now, to the extent that the states need to pick up the slack, okay, they could do that, but the states can't print money like the federal government's doing it. But what we need is a much bigger reduction in government spending because we have massive deficits that the president doesn't want to really address. Now he did say that, well, we're going to send money back to the states, but not all of it. Like we're going to have some little bit of savings, right? We're not going to take all the money that the government was spending and send it to the states. We're going to just take some of the money. No, it has to be, we're just going to eliminate the department and that's it. And it's up to the states to then, if they want to spend more money, they can. the main reason, though, that the states don't have more money to spend is because the U.S. government is spending so much, because everybody has to tax the same taxpayer, right? So if I'm living, in Connecticut and I'm paying federal taxes, and the federal government is taking 40%, 50% of my income in taxes, how much can a state take, right? Because there's only so much they could take, because it's the same pot. But if we didn't have a federal income tax, like we didn't have up until 1913, and the federal government wasn't taking a lot of money from me, well, I'd have a lot more left over for the state of Connecticut. So if the state of Connecticut needed to do some things and they needed to tax me, I would be in a much stronger financial position to afford that tax, because I wasn't getting killed by the federal government. So the ability of a lot of the states to do a lot of the things that they have the constitutional authority to do, that the federal government does not, because the federal government has usurped that authority and is spending money on things that are not authorized by the Constitution. Now the states can't do it because the states can't afford it, because the government has already taken the money away from their citizens and there's nothing left, right? You can't get blood from a stone. But the problem is the states are always going to do better, right? And I'm not a fan of government at any level, but the more local, the better. The closer the government entity is to the problem, the more efficiently it could potentially solve it. So to the extent that your town can solve something, right? Let's say, there's pothole that needs to be filled, right? Do you want the federal government to have to fill that pothole? You could wait years, right? It should be the town, the city that you're in, the smallest jurisdiction that has authority over that issue. That's where you want it handled, right? And so education is far removed from the federal government in Washington. Right? If it's going to be handled by a government entity, it should be the town, right? And that's mostly where the funds come from. But there shouldn't be extra money coming from Washington, D.C. It should be the local government. And if anything, if you want to elevate it to a state government, that's still way better than elevating it again to the federal government, having the federal government making educational policy for all 50 states. Let each state make their own policy, make their own decisions on how they want to spend money, and not have the U.S. government usurp that authority from them. Because the federal government has the initial claim on everybody's money now. And so the states have to make do with the crumbs that the federal government leaves. That's not what the founding fathers envisioned. The founding fathers thought we'd have a federal government of few and defined powers that basically didn't do anything unless there was a war. And when there was a war, well, then, maybe it imposed a direct tax or it had some involvement. But other than that, what was the job of the federal government? Just to protect us from invasion and to make sure that we had, free trade, that the states weren't imposing tariffs on one another and making it difficult for people in one state to do business with people in other states or move from state to state, right? We had open borders within the states. But the federal government was not supposed to do anything. And it didn't do anything really until, the Federal Reserve, and until we got the Great Depression and the Great Society programs the New Deal programs of Roosevelt. That's when we really started to see a activist government. Although before that too, somewhat with Herbert Hoover prior to Roosevelt. But for the 19th century, nobody really knew that we had a federal government. I mean, other than during the Civil War. But apart from that, the federal government was just in the background. There were some taxes, on liquor, right? That's what the revenue agents back then. That's the Internal Revenue Service collected liquor taxes, tobacco, alcohol, firearms. There was no income tax. That's what the revenue guys were, right? If you had an illegal still in your backyard, right? That's what you were worried about, right? You weren't worried about an audit where you didn't pay enough income taxes, because that didn't exist, right? They wanted a tax on alcohol, so it was small, right? So if the state government did want to do something, the citizens were quite wealthy and they could afford to do it. But again, listening to Donald Trump, everything was fantastic when he was president. It was the greatest economy in the history of the world, thanks to him. And all we have to do is reelect him, and it's going to be great again, right? Inflation is going to go away. Now, he claimed that all the money that he spent during COVID was necessary. He said, I had no choice. I had to spend all this money, or we would have had a Great Depression. So I did the right thing. The reason we have inflation is because Biden kept spending money after I left. That what I did was necessary, but what he did was not. But the reality is, what he did also contributed greatly to the inflation. He did not have to print all that money. He did have a choice. He could have done the right thing and not printed any money, or not. He didn't print it directly, but he didn't have to spend all that money so that the government, the Federal Reserve, could print it. They didn't have, the policies were wrong, but he still claims that what he did was right. And it was just Biden who, was too much of a good thing. He should have turned off the spigots. But he set the principle. He basically took the baton and handed it to Biden, right? Because Trump had already set the precedent. We need stimulus because of COVID. The government needs to, hand out a bunch of money. And so he handed out more money. We never needed to do that. It was a mistake when Trump did it. Yes, it was a bigger mistake when Biden did it, but Trump did it first. Trump set the precedent and Biden just followed it. But of course, he had to follow it up with something bigger, right? Because he's Biden and he's the Democrat. So if the Republicans are willing to spend all this money, well, we Democrats, we care even more than they do. We got to outspend them. But maybe had Trump never made the mistake of doing the PPP programs and the stimulus in the first place, Biden wouldn't have been able to get away with what he did. So I think there's a lot more responsibility that belongs with Donald Trump for this inflation that, of course, Trump is going to own up to. But from a political camp, perspective, he's doing the right thing. Inflation is horrible, and you might as well blame it on Biden because the media doesn't understand it. Nobody understands where inflation comes from. During the 4 years he was president, inflation averaged maybe 1.9, right? Below 2%. With Biden, it's maybe 5.5, 6, something like that, the official rates. So he owns that issue. He can certainly say Biden caused all this inflation. And when I was president, we didn't have inflation. When Biden is president, we have huge inflation. So reelect me. We'll have no inflation. You want inflation? Vote Biden. You don't want inflation? Vote Trump. Because I think that is what a lot of voters are going to do. They are going to blame Biden and not Trump. And Trump could win on that. And that alone, because inflation is going to be the number one issue in this election by far. And again, inflation is really taxation. That's what it's all about. People want to know. I'm reading all these articles about how people are struggling to pay the bills. And they're taking second jobs and third jobs, and they're borrowing all this money. And now they're going to take out a second mortgage on their home. They're struggling to pay their taxes is what they're struggling to do. They're struggling to support government. The size of government. Remember, the government is much bigger now than it was before COVID by a massive percentage. So how are we paying for all this government? I mean, if we're having a much bigger government, where is the bill, right? We don't get it for free. Nothing's free. There's no free lunch. So if Americans are buying a lot more government, well, how are they paying for it? Inflation. That's how we're paying for it. They didn't raise our taxes. They raised our prices because instead of taking our money to pay for all these extra government programs. They took our purchasing power. They didn't tax us, right? They didn't take our money out of our paychecks. They took the purchasing power out of our paychecks. They printed money. We're running bigger deficits. The deficits are over $2 trillion a year. They were a fraction of that prior to COVID. Okay? So the government is spending all this money. And as a result of all the money they're spending into circulation, prices are going up. And now everybody has to pay higher prices. And now everybody is struggling. But what they're struggling to do is to support the government. All of the people that Biden said weren't going to pay any new taxes if he was president, they're all paying new taxes. We just call it inflation. And so when they're pissed off about high inflation, they're pissed off about high taxes, which means they're pissed off about big government, because that's what you get when you have big government. You have big taxes to pay for big government. You don't want big taxes? Then have small government, right? That's why people want small government, because they don't want high taxes. They want low taxes. But the public has been fooled into thinking they can have their cake and eat it too. They can have big government and low taxes. You can't. So what you have is big government and high inflation. That's what we've got. So it's an inflation tax instead of a payroll tax or an income tax, but it hits the middle class and the poor the hardest. And that's why Biden is struggling with those voters. Anyway, that's it for today's podcast. Again, if you enjoyed the podcast, don't forget to give me the thumbs up, add a comment if you liked it, share it with your friends. Also, don't forget, sign up for the free newsletter at schiffsovereign.com so you don't just get these podcasts, which are, at most going to probably be one a week. I'm leaving in 6 days for a 3-week European vacation, and I'll probably be doing about one a week there as well. So in the meantime, the daily free newsletter from Schiff Sovereign is going to keep coming out. So you can go there and sign up. And if you want even more information, then become a premium member and sign up for Schiff Sovereign Premium. Bye for now.